keep you updated on the capital and financial markets. Here is a recap of what happened. Singapore banks are working with the city-states authorities to set uniform standards on screening potential customers from the crypto and digital asset sectors, amid various global fallouts in the industry. The lenders are collaborating with the central bank and police to fine-tune their vetting approach when opening accounts for service providers in all types of digital assets, according to people with knowledge of the matter. The industry-driven project has been ongoing for about 6 months, and a report outlining best practices in areas like due diligence and risk management may be published in the next 2 months, the people said, asking not to be identified as the discussions are not public. The Ministry of Higher Education and the Securities Commission Malaysia inked a Memorandum of Understanding to jointly develop the Capital Market Graduate Programme. CMGP aims to improve the knowledge and employability of 9,000 public and private university graduates, particularly for the capital market industry, over 3 years. It is also funded through an allocation of 30 million ringgit by the Capital Market Development Fund, a fund managed by the capital market industry. The MOU was signed by the SC Chairman, Datuk Seri Dr. Awang Adik Husing, and the Deputy Director General of Higher Education, who is also serving the duties of Director General of Higher Education, Ahmad Rizal Adnan, and was witnessed by the Minister of Higher Education, Datuk Seri Muhammad Khalid Nordin. The CMGP, which is expected to be launched by Prime Minister Datuk Seri Anwar Ibrahim in the near future, is spearheaded by the SC in collaboration with the Ministry of Higher Education, the Ministry of Finance, Bursa Malaysia, and senior representatives of the capital market industry. The program, which is expected to address the shortage of skilled manpower in the capital market industry, will help produce graduates who are more prepared to be employed in the capital market. This will reduce the deficit of skilled talent in the capital market and simultaneously improve graduate employability. Thailand's securities regulator, the United Nations Development Programme in Thailand, and the Thai Listed Companies Association will jointly develop a website that will be a resource center for the UN's Sustainable Development Goals, or SDGs. The website will act as a one-stop knowledge hub with tools for learning about the SDGs, and it will create tangible benefits for all groups of stakeholders, including listed companies, asset management firms and investors, Securities and Exchange Commission, Thailand says in a statement on the 10th of April. This project is part of a series of initiatives by the regulator to build sustainable capital markets in Thailand. Australia's gig workers are missing out on as much as $400 million of retirement money annually because they are not paid superannuation, according to a study by Industry Super Australia, a research and advocacy body for industry superannuation funds. There are currently 275,000 gig workers in Australia, including delivery drivers, caregivers, IT professionals and education workers. The $400 million Australian dollars figure is based on an average superannuation contribution of 1,450 Australian dollars per worker in a year. The average worker who has been in the gig economy for 5 years could have as much as $29,000 Australian dollars more in their retirement fund if they were paid superannuation, ISA says in a statement on the 13th of April. Not only would this extra money improve the quality of life for individuals at retirement, it would reduce the burden on the age pension. Paying super to gig workers is becoming more important as the on-demand workforce grows, the group says. The Financial Planning Association of Malaysia has advised the public to be wary of dubious investment schemes that use the name of legitimate financial planning firms. In a statement today, FIMM warned that scammers would use financial planning companies' key names on bogus companies to confuse the public and add them to social media chat groups while pretending to represent legitimate financial planning firms. They also offer dubious investment schemes that promise high returns and post bogus investor testimonials to show proof of transfer receipts and making profits to gain the confidence of potential victims, it said. The latest e-zine is now available for download at FIMM's official website. This edition features articles on the usage of social media for investment marketing, an introduction to vulnerable investors, as well as the recent Global Money Week. Download your copy today and stay informed about the latest developments in the industry. This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.